Aloha. How's everybody doing? So I hope everybody's having an awesome weekend. This is 50 Pips, rocking and rolling, 0709-2014. Not making any trade calls or recommendations because only you're responsible for the trades you may decide to take. The fact you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So welcome to another week. Hopefully it'll be an interesting one. Keep in mind it's bank holiday in China. We've had some moves in the overnight session, basically a lot of it on GPB, I think, to do with Scotland independence issue. So we've got like cable trading 61.90, so we've got a lot of gaps all over the place there, so that's going to be something to keep an eye out for. I mean, the main event risk on this week is really going to be, we're going to have Carney speaking on Tuesday and the manufacturing data out of the UK, so that'll definitely be interesting. And then on Wednesday we have the inflation report hearings, which clearly we could see a bit of movement. That's the first day when we got a central bank on the wire, so we got a rate decision out of New Zealand. Then we got unemployment claims and some other data out of Australia with China data, and unemployment claims out of the US, and then on Thursday too. And then on Friday basically we got the BOJ on the wires and some more retail data, University of Michigan out of the state. So again, we do have some stuff, not a super busy week, but clearly after the moves we've had last week and what's happening here in the overnight session on Sunday, we could definitely see an interesting week shake up. So what's going on? I think the first things, most interesting thing, or what everybody's going to be looking at, is on the equity side, right? We discussed, and we've been yapping on, 50's been going on about the 2000 level on the equity side, and basically that's what's, I don't know why it's just happened to pop off my chart for some reason here. We'll put it back on, but basically that's really been the bull bear line for the ES, right? It's just, and you see, you've had this fighting everything, day chart trying to press above, then the sellers coming in and closing it back below that 2000, Friday closing back above. So it's going to be key to see how we behave here. And the big question is, if we got more upside, or are we going to start to see a bit of a healthy correction? I mean, if you look at all the equity side, even if you're looking at the NASDAQ or you're looking at the DAX and the FTSE, those are very nice longs. Those retracements we looked at, supports for moves back into high, very nice moves, and they look like they probably have some more legs. Similarly to what we said last Sunday going into September, when we looked at the monthly closes on the ES, we said it's very rare to have this kind of a monthly close and price to not press higher, right? So if you're looking to short off that monthly close, trying to be aggressive, you've got very little edge in that kind of trade, and you see we have pressed higher, very little edge in that kind of setup. So here they look bullish. They look like, again, it's healthy. It would be healthy to see some kind of retracement, but the way they're shaping up, it looks like if they fail, they're probably going to have to fail from a higher level, right? And if we're looking at a bit of more of a tactical chart on the ES, you see what happened here, right? Around this 2000, and during the week, there were plenty of opportunities to try to look to get tactical around this 2000. But, this base support kept on holding, buyers coming in well ahead of it. And then, we came back down. Very nice chance to get long here. Look at all these wicks, all these positive closes at lows on this 1 hour, very clearly bullish action for a move back into that 2000, not necessarily back here, but very nice trade at those 90s for a move back into the 2000. And now we're pressing here. So it's all about that 2010 here. Let's see how we behave, but clearly the fight is on, and the fight remains around the 2000. So I wouldn't be focused too much what happens, intraday in terms of what levels get pierced or not. I'd be looking at, daily closes above or below the 2000 to give us an idea of where the next day's Momo is going to come, right? Now, in terms of some of the Forex pairs, I think Aussie, a lot of people asking me about Aussie, and we kept on saying it's really all about that pivotal 93.30s, and as long as we keep on closing above that 93.30, we'd expect this to continue to try and take out some upside and try and get some upside pressure. As I said, I don't think the chart was particularly interesting in terms of big positioning for swings. I think you could make an argument both for the long side and the short side, but the way this is trading, as long as this continues to trade above the 93.30, it looks like it's going to attempt a break higher back towards the 94s, 95s. Again, I think it's very choppy. There's going to be a lot of data out of Australia this week. It's not one of my preferred charts, but that's the way we're looking at it. And we do have a rate decision out of New Zealand, so we might see some profit taking on the shorts there into that rate decision. In terms of the chart, nothing big changes. It's really all about that 84.50. We talked about that level, and so far that level's been very, very nice, very tradable. On those first moves down, chances to try and get tactically long, take some off. Then clearly that didn't work, but clearly previous support acting as resistance. Once we broke down, we said here there's very little edge as long as it's below here trying to buy this. Most likely the best bet is to short on moves back into these 84s, stops above these 84.50s for a bit of a continuation lower back towards the 82.50s. Very, very technical. Previous support here, bam, we break through, acts as resistance and continuation down. Right here we're starting to see some basing action, so this is very interesting. If we start to get daily closes below this level, then those 82.50s are clearly going to attract. But the way this is looking, and as long as we hold above here, it looks like we'll probably be some move back into the 84.00s, and then it's going to be game on, all about those 84.00s, 84.50s. Again, I wouldn't be trying to flip coins or to be very aggressive into the rate decision. It's best to let it settle, but that's, you can look at the past updates. We've discussed this in a lot more detail. That's really the key area to keep an eye out for, right? So clearly still hovering there. Now another chart, very, very interesting. Interesting last week is the yen chart. And we discussed basically we've been looking for this to continue to rotate higher through all of those pivotal levels and ultimately looking for the 105.40s. What we said last Sunday, if memory serves correctly, is that we expected this to go try and take stab at this 05.40s, but we did not expect it to close outside. We expected it to broadly stay in range here, stay bid, but stay in range, and possibly opportunities on a failure to break outside this range tactically to play the downside a bit. At the moment, it's going to be very interesting to see how the week goes. Keep in mind, these are pivotal levels, so it's going to be very choppy in between 105.40s and 104.10s, but clearly as long as we keep on getting daily closes below 105.40s, 104.10s are going to attract. Right here we're trading pretty much smack in the early session at 104.98, so it's still hovering here. You've got a bit of wheeling and dealing. We'll have to see how this plays out. Aggressive move downs, expect 102 to hold as base support, break higher, look at that trend line. If you haven't looked at the discussion, I think it's in last week's recording. We discussed it in a lot more detail, but basically the levels remain the same. What's going on pound? So again, on this whole Scotland issue, we're getting a lot of moves in the overnight session. Cable is currently trading, let me check, 161.95, so that's a pretty decent gap down. What we discussed here, we discussed this very important point on the weekly, right? We said if anything, once we start to sell off, there was only one place to try and catch this for an acceleration back higher, for this to move higher on the weekly and extensions, and that was at the 50. On the weekly, and there were plenty of chances here to trade this to the long side, get to break-even position or better. Then clearly the trade didn't hold, and what we said is we start trading below this 50, do not try and be a hero. There's going to be very little edge trying to catch this. If it's going to move aggressively in extensions for the 177s, it's going to get a sharp bid right there. If it doesn't, let it go. Most likely we'll see more acceleration, possibly all the way back into the 160s. So right here, the way this is trading, we'll have to see what happens now when we open up on all the markets, but clearly it's holding very, very heavy. I think that 160 is going to be very, very interesting support. Here we're pretty much trading 162, so still trading heavy. Again, just a reminder to all the junior traders or the newer traders, gaps tend to fill. Gaps do not have to fill. Gaps do not have to fill the same day. Gaps do not have to fill the same week. Gaps do not have to fill the same month. You get the point. They usually tend to fill, but don't be the hero trying to look for them to fill straight away, over leveraged and blow your account. It's not worth it. There are a lot better opportunities out there, okay? So let's see what happens, but clearly the line in the sand now is pretty much going to be clearly, if you're looking at those whole breakdown points, right, which are pretty much lining up quite nicely with that 50, right? So that's around the 165.50s as base resistance. Shorts will probably look to sell if we get into there, but right here, this is the kind of thing that's probably going to stay very volatile until we get the actual vote out of Scotland. It's not something I would be too interested in taking very big positions on. I'd be very tactical on, but the risk clearly is for more downside. Keep in mind that the vote you'll probably see a strong knee-jerk reaction on the vote. So again, I think as technical traders, the focus is try to look at charts and try to trade technical levels, not to try to take bets on outcomes or votes or on central bank decisions. You can, but I don't think that's a reliable strategy for the long term if you want to be a professional trader as your sole strategy, okay? Now, what's going on Euro? Euro, very familiar chart on the weekly. We discussed this. We were looking at this chart for a long time. We've been on this chart for ages, right? And basically what we said is, just a reminder, we had these basically arrows and double arrows indicating very strong Momo lines and very strong Momo lines. So we said, 135.00 is going to be pivotal for Momo. We get a daily close, weekly close back above the 137. This very high odds, we're going to go back towards the 140s, 141s. This was when it was basing here, trying to base on the weekly at these 100 and the 200 moving average. We said if we get a weekly close, daily close below the 132.90s, this is going to trade very heavy, most likely be attracted to the 130.20s, okay? So basically right now we're at this pivotal level. Just watch the open on the week. Currently Euro's trading 129.50 right here, right now. So pretty much where we closed. So keep an eye, as long as we trade, but we hold below these 129.50s, we'll probably see some acceleration. The market probably try to take a stab back into the 128s. I would expect 128s all the way into these lows, right? So 128s into 127.80s, etc., to see very, very aggressive buyers trying to come in, shorts covering some dip buyers coming in. But right here, it's going to be very, very tricky. Keep in mind, like the ES, but on the opposite, just flip the chart around. It would be healthy to see a retracement here. It would be healthy to see the shorts take some profit. The market can remain in brackets, irrational longer than most traders can stay solvent, right? So don't try and be a hero again. Keep an eye that it's going to be healthy to see a bounce. Let's see how this behaves. Clearly, the market, any kind of move back into these 31s, this breakdown point here from these last weeks, you should see shorts coming in trying to sell this. This will likely be headline driven also, depending on what's happened on Scotland, what's happening in terms of geopolitical risk. So I think the best thing going into the week early is let these settles and then continue to look at the charts and look at what the most interesting plays are. Now, this is an interesting zone because this is also, by the way, before I forget, a 50 back of this whole move down. Not a favorite kind of fib for me, but I know some people are going to ask, so I'll put this up. We're inside the 50 to 61.8. Now, I've got another chart where we'll show you a bit clearer what's going on here in terms of that fib on Euro. And there we go here, right? So you see it's clearly coming. This is the weekly. It's coming back down into that 50 back zone, 61.8. You've got this trend line, and you've got all these dips that got bought back in 2012, right? This was clearly an important zone where the market found buyers. So the big question is, as we're approaching this level, are we going to see buyers emerge again? I would expect to see profit taking and buyers coming in towards these lows, towards these levels, especially since we haven't really had a retracement for the past, all the way since that sell down into 139.50s. So I think that's another way of looking at it. And I would say this is pretty strong support here, okay? So I hope everybody has an awesome rest of the day wherever you may be. Have an awesome week. Good luck, good trading, good odds, whatever you want to say. Just keep it tight. Don't be silly. Play the percentage plays. And thanks for listening. I'll see you guys on Twitter. Have an awesome one, guys. Take